So we are starting now.
Yeah, no problem.
Avinash sir. Yes.
No problem, no issue.
Very good evening to one and all. On behalf of Surat Branch of WRC of ICI, I welcome you all in today's session on recent amendments in TDS provisions for the financial year 2021. And we are very privileged to have a worthy speaker, CA Avinash Ravaniji, with us from Mumbai to enlighten us on the topic. And friends, he has already covered, or he has taken already 500, more than 500 sessions on various topics. So we are fortunate enough to have him today with us. And this is one of the benefit of the COVID also, that we have speakers from various region to our branch to guide us, to enlighten us on the various topics on Zoom meetings. Thank you so much, Avinash sir, for being with us, and I welcome you on behalf of Surat branch of WRC of ICA. And I would request my managing committee member, colleague Pradeep Bhai Kabra, to give brief introduction of Avinash.
Thank you, Mayor sir. CA Avinash Rawani ji, he is become FCA and DISA qualified, and he is member of ICI since 1993. He is practicing in Rawani and Company since 1993 in the field of direct tax, audit and company law matters. He is also member of various study circle and study groups of WIRC of ICI, and he has delivered more than 500 lectures on the topic of income tax and company law. He is visiting faculty of the corporate houses and that IIM, contributing articles to various study groups and website including ICI Journals. He is called team member of ICI in handling e-filing help desk on issue on uploading filing of various e-tax audit reports and EIT returns mandate under the provision of Income Tax Act. And he has been special inviting member of Direct Tax Committee of ICI for the year 2018, presently member of various study groups of ICI, and he has written a number of books also. He is co-author of the book on fringe benefit tax published by Malad Chamber of Tax Consultants in the year 2009. His technical guide on ITR form published by Direct Tax Committee guidance notes. So he has very vast experience, and friends, I'm sure that he is going to share his in-depth knowledge with us, and this lecture is going to be very interactive, and this will be helpful for all members. You are welcome, sir. Welcome.
Thank you, Pradeep ji, for your kind introduction, and I'm grateful and thankful to the entire Surat branch team for giving me this opportunity to speak on this subject. Subject per se is not so vast. It will take roughly around 1.5 hours, not more than that. And we'll try to cover all the provisions which are there. So basically, this is divided into two parts. First part is related to TDS and second part is related to TCS. And if any questions are there, I think most of the queries which I have received from various forums across till yesterday has been covered in this. So 99% there should not be any issues which will be remaining unaddressed. But if anything is there, just you can discuss it at the end of the session. Better we keep it at the end of the session, so that will be much better, and we'll have enough time to discuss, and the flow of the topic that does not get interrupted. So that is one request which is there from my side. Coming to topic per se, we are all aware about the TDS and TCS, and we have been dealing with all this formalities, regularities with the TCS. Basically, Chapter 17 of the Income Tax Act, which almost has around 44 sections, which deals with TDS, and roughly around 992 to 196D are the sections which are dealing with the nature of payments. And in 192 through 194, we have various subsections, with starting from 8 and last section which has been added O. So till now the scope is remaining, that P to Z is remaining. So next budget when it comes, the P and P to Z also does not get covered. That should be seen that. So we have roughly around 29 subsections in this entire 194 sections. And other sections are dealing with the income tax compliances, income tax, this non-compliance, what are the provisions which are related to that. Then several payments related this, we are aware about this, that 1 minute. So several payments like salary, interest, commission, we know about that. TDS has to be deducted, TDS has to be deposited, we are aware of it, and all the time limits which are specified within the timeline deadlines, we have to follow the compliance procedures. And basically, if you summarize the entire TDS applicable provisions, it is in covered within the 4 dilemmas. That is, 4 Ds has to be complied. First, you have to deduct in accordance with the provisions of the Act, which is applicable for that particular assessment year. Then deposit within the specified time limit when it is deducted. And after deducting deposit, and then third D comes to then about declare. That is, you have to file the TDS returns. So this, and after filing the TDS returns, the fourth point which is remaining, that fourth requirement, that is, you have to download the 60 issue the TDS certificates, which is mandatory. And for all these deadlines are being specified under the Act. So any of this activity, that is, if any of this chain is broken, then the compliance remains unfulfilled, and which results into defaults and penalties. And that is 2 basic important changes which has happened this year. That in your TDS returns, that is, if you are making payments in relating to the interest payment, it is under section 194A. So whatever the interest payments you are making, whether you are deducting TDS or you are not deducting TDS, you are required to report that in the income tax TDS return. That is mandated and it is compulsory. So if the person is coming, any deductee has given you lower rate of deduction certificate or form 15G or 15H, then you are not required to deduct the TDS. But definitely that entries have to come in the form 6, form 26Q, that is mandated and that is required. And even if the TDS interest which has been paid, which is below the taxable limit, that also is required to be reported. So please don't please don't forget about this. Mentioning about this in the TDS returns, otherwise it will lead to non-compliance. Then another change which has happened is that now any NRI person, that is a foreign resident citizen, if he wants to apply for lower rate of deduction certificate, that is in form number 13, he can do it by applying in online on form number online on the Traces portal. And for that purpose, the specified link has been given on the Traces website. And this link cannot be the link which is provided on the for the NRIs cannot be accessed to the Indian IP address. So that should be kept in mind. So whenever any lower rate is rate of certificate is to be applied for NRIs, they have to apply they can apply it from their country itself. So they don't have to come to visit to India and apply for the TDS certificate, that is lower rate certificate. So that biggest change which has been made, these are the 2 major changes in the Finance Act 2020 onwards when it's in the filing of returns and compliance. Now coming that is about the TDS deposit, everybody know that TDS has to be deposited on the 7th or the subsequent month in which the TDS has been deducted. And the due date, that is on the month of March, 30th of April is the due date. But whenever the payment, that is when the government assesses make the payment, they don't have to actually have to make the payment, but they have to adjust the past general entries. And based on these general entries, the TDS is being transferred from one government authority to another government authority. So when we deposit TDS, we get the challan which has SIN number. But when these government entities, when they deposit the TDS, that is they transfer the TDS amount, then instead of SIN number, the BIN number is generated, which is called a BIN identification number. So that, and they have to do it on the same day. So they don't have a time limit of 7 days just with us like other SSCs have. So this is the biggest change which happened, which is there. Then this about those SSCs who are not covered by this, not applicable to deduct TDS or not liable to deduct TDS, but they enter into certain amount of transactions. Basically, when there is a purchase or sale of property, then the purchaser has to collect the tax and deposit it within the government authorities. And similarly, if the rent payment is made, then exceeding 50,000 per month, then TDS is required to be deducted. These are the mandatory compliances, whether the TDS provision is applicable or not. So that also has to be kept in mind. And for them, the due date is, that is 30 days from the end of the month in which the TDS was deducted. And this TDS payment is controlled through PAN number. They were not required, the SSC is not required to obtain the PAN number, but the payment can be done through, payment has to be done through PAN number. So both the payer and the payee's PAN number is required to be mentioned in the return. It is 26QB and 26QC are the returns which are specified. And once these payments are being made, automatically the other systems get automatically updated when you make the payments. Then after completing this, you have to download the TDS certificates and you have to issue the TDS certificates. Basically, form number 16A, which has to be issued quarter at the end of each quarter once the TDS has been written, has been filed. Form 16 is the annual salary statement that is being, along with the form, this perquisite statement is also to be generated online. So that is so all these certificates are to be generated within the specified time, and if you don't comply with the provision, there are penalties for that. And similarly, 16B and 16C are the certificates which are specified for sale of immovable property and rent payment made respectively. And TCS certificate, because TCS is also made applicable. The due dates for filing the TCS returns are also the same on the lines of TDS returns. And for TCS also the certificate is required to be generated. That is form number 27B is there. That has to be filed quarterly. So these are basically the provisions of the TCS. But one question had come that if a number of entries are there in a particular month for a particular deducting, that whether each of these entries has to be entered separately in the TDS returns. Here you have the option that if you want to mention it separately, you can mention it separately. But if you want to club it, you can definitely club these entries and make a single entries can be done. So that amount to a non-compliance. So that should be kept in mind. Then there are 3 notifications which are there. There is one this ordinance which was released by the government. It is taxation and the other laws. It relaxed certain provisions related to TDS. And then came a notification of number 35 of 2020 and 39 of 2020 on 24th of June. So basically what says the time limit which was there for issue of TDS statement or filing of TDS statement for the month of March. This is the last quarter which was there. Due to corona pandemic, there was a lockdown which was declared on 24th March 2020. The due date was extended, that is 30th June was due date, and that was extended to 31st of July, and within 15 days you have to issue the form 16A generated. So this was and those who had not made the payment for the month of, that is for the last quarter, they were given the concession that the rate of interest would be applicable for delay payment. If you make the payment between the for the month of month of March, that is 4th quarter which was there. So if the payment was made between April to June, then the rate of interest applicable was 9% and not the 18% in the normal course. So this was the concessional rate which was granted at that time. But in such case, if suppose today the TDS is remaining outstanding and TDS has not been paid, and the person wants to pay the deposit, the TDS as of today, so whether they can obtain the concession of this 9% or not. So here it says that no, the concession was only available till 30th of June. That is those who have defaulted or those who have deferred the payment. So up to 30th June, if they have made the payment, they would have, the interest would have been charged would be at the rate of 9%. But now since we are making the payment, the interest applicable would be 18%. Interest rate applicable would be 18% and not the 9%. Then notification number 35 of 2020 and 39 of 2020, which was issued on 24th of June. Now, if that is due to corona pandemic, the first quarter and the second quarter TDS returns have been, the time limit for submitting the returns has been extended to 31st of March. 31st of March. So up to 31st of March 2021, you can file, you can upload the return. There will be no late fee which would be levied. And similarly, the 26QB, that is basically related to filing of there is TDS returns for sale of property, purchase sale of property, and 26QC and 26QD relating to your rent payment, etc. For the period from April 2020 to November 2020, the date is extended to 31st March 2021. So there will be no late fee. And again, the due date for the issue of TDS will be from the date of 30 days from the date of filing the returns and not the 31st of March 2021. So these are the basic notifications which has come to give the concession on account of Corona pandemic. Then press release which was released on 13th of May, that is the rates of the TDS were reduced by 25% in many cases. In almost, it is not reduced in almost all the cases, but many cases it has been reduced. And for this purpose, we have given you the detail of where the TDS rate, what is the TDS rate applicable. So one thing here it is to be kept in mind that 30th the press release was issued on 30th May. And it says that whatever TDS which has been deducted from 14th May 2020 till 31st March 2021 will be at the rates which are specified in the specified press release. So any payment which is made from 1st of April to 2020 to 13th of May, the old rates will apply, the concessional rate won't apply. And those who have filed, basically those who have filed the TDS returns for the first quarter, they might have got the demand notices wherein the effect of the deduction, that is the reduced rate, has not been given by the CPC. As per the last discussion which happened with the CPC, it was stated that the software was not updated, and now they have upgraded the software. So they will be reprocessing such returns, and whatever the demands which has been generated will be cancelled. So please wait for till that. You are not required to file the correction statement for this purpose if there is a mistake on account of on the part of the CPC for levying the interest and penalty or for sending you the notice for short deduction. Then about this Finance Act 2020 has made a biggest amendment which says that the tax audit limit has been increased. That is what it says, that when those individuals and HUFs who are not liable by the tax audit were exempted from deduction of TDS. And this year in the Finance Act 2020, after the amendment, the tax audit limit has been increased to 5 lakhs, 5 crores rupees if the certain conditions relating to cash payment and cash receipts are being complied with. So in that case, if the person falls within that, fulfills that criteria, and if the tax audit is not required to be done, so as per the old provision, he would not be liable to deduct the TDS in the subsequent assessment year. Especially this is in the case of individual and HUF. Now the Finance Act 2020, what it says that if the turnover of any person, that is basically those who are doing the business, and the turnover is exceeding rupees 1 crore, and in case of professionals, if that turnover is exceeding, gross receipts is exceeding 50 lakhs rupees, then they are required to deduct the TDS whether they are eligible for tax audit or not. That is a separate thing. So TDS is covered now for everybody. So if the turnover is exceeding the specified limit. So even if you are not covered by tax audit, you are required to deduct the TDS. That should be kept in mind. So that concession is now withdrawn. So that does not remain. Then coming to the section-wise provisions, that is basically the amendment which has come during the financial year. We start from the specific section specified. That is first section which comes is section 192. 192 section basically deals with the perquisites which are TDS has to be deducted on the perquisites which are granted by the employer to the employee. And one such perquisite is about the ESOPs facilities which has been given to the employees, wherein there is no actual flow of money from the part of the employer to the employee, but the employees are given the shares as a in kind. So basically, it is in kind remuneration which has been given. And when this ESOPs were being granted, it was treated as a perquisite, and the employer was required to include that perquisite in the income of that employee, and the TDS was required to be deducted. So that is the provision on that. Now this was been represented by many associations and many times, that basically what happens that in case of startups which are there, so startups which are there in startups, they don't have basically the money to pay to the employee, and for that purpose they give the this ESOPs in case of instead of remuneration, and they were finding it very difficult, and even the employees are finding it very difficult to deposit this tax. So the government has accepted this demands of the industry, and now it says that the Finance Act 2020 has amended here, and it now says that this will be the ESOPs which are granted by the company will be treated as a perquisites in case of employees. So the in any of these criteria, if they fulfill in any of the financial year, it will be treated as income of that financial year and the perquisite of that financial year, and the TDS will be deducted. That will be included as an income in that particular assessment year, and the tax will be deducted and paid accordingly at the rates which are applicable in that specific assessment year. So first criteria, it is requirement that that a company should be a startup company, which should be registered as a startup, and it should qualify with all the conditions which are there given by the circular of the DPIT. So DPIT. So that has to be followed. And if the ESOPs are granted to an employee, and if the employee ceases to leaves the employee in between that period of 4 years, then the year in which he leaves the employment, in that assessment year it will be treated as a perquisite. And in between this, in this 48 months, so in this when the ESOPs are granted, in the subsequent 48 months, if that person sells the shares, so that sells the shares and receives the consideration, basically the selling of the shares, and he will get the money. So the year in which he sells the share, that will be treated as the perquisite will be chargeable in his income in that assessment year. And in this, in both these criteria are not fulfilled, then up to 48 months, after completion of 48 months, it is continues to be in the employee. He has not sold the shares, neither is left the employment. Then at the expiry, after the expiry of the 48 months, once this will be charged as a perquisite, and the income tax has to be paid. So this is the basically the amendment which has come in the current assessment, this finance. Then coming to this dividend, that is basically a dividend was taxed in the hands of the this company was paying a dividend distribution tax, and after payment of dividend distribution tax, the dividend was tax free in the hands of the recipient. But that is now withdrawn. That is from 1st April 2020 onwards. If the company pays the dividend to any resident shareholder, then it will be chargeable. Tax has to be deducted at the rate of 10%, and the reduced rate of that is 25% concession is available to dividend and dividend. So if any dividend payment which is exceeding 5,000 rupees in case of any residential shareholder, the company will be required to deduct TDS at the rate of 10%. And for this financial year, that is from, if any dividend is paid between from 14th May 2020 to 31st March 2021, then the TDS rate would be 7.5%. So any person who doesn't want that TDS has to be deducted, and if his income is below the taxable limit, then they can apply for, they can issue form number 15G and 15H, give the form 15G and 15H to the company, and the company will not deduct the TDS. So that option is available. And even in case of companies which are having losses, because losses or some, they can apply for the lower rate or nil rate of deduction certificate, and they can submit it to the company, and the company won't deduct the TDS. So this is the amendment which has happened. Then coming to 194A, that is provision which deals with the interest payment which is there. And in case of basically cooperative societies which were there, cooperative societies, when they pay interest to any member, the interest is they don't, the cooperative society doesn't have to deduct the TDS if the interest is paid to the member. But here the Finance Act 2020 has now amended the provision. What it say now, that bigger cooperative societies are being brought in the net. So that exemption which was there available to the cooperative society now stands withdrawn. And the definition here says that bigger cooperative society means the cooperative society, larger cooperative societies, wherein the turnover, that is total sales or gross revenue or the turnover of the society exceeds rupees 50 crores in the previous financial year. So those cooperative societies whose turnover or the gross receipts were above 50 crores in the last financial year, is financial year 1920, then this then they, whatever the interest they will be paying to their members, TDS will have to be deducted at the rate of 10%, and the basic exemption limit definitely is there. That is for normal citizens up to 40,000, and for senior citizens up to 50,000. And here also, if the person is having income which is below the taxable limit, then 15G and 15H can be issued, and that can be accepted by the company, and even lower rate certificate can be applied in this case. The concessional rate of 25% that is basically is also available to section 194A. Then coming to section 194C, basically it is TDS on the contractual payments. And the Finance Act 2020 has amended the definition of the works contract, wherein now it has brought in the value of the material, that is works contract, works definition has been amended, that any this in case of basically the job work manufacturer, wherein the material is being certified provided by the job work by the job worker to the processing unit, the value of that material will also be considered included as a in the price of the contract. So TDS will have to be deducted on the gross amount, that is the amount which is the processing fee charges plus the material cost will be treated as the price for the paid for the works contract, and the TDS will be deducted on that amount. Again, the rate will be 2% and 1% based on the nature of the asset deducted. There is individual and HUF, it will be 1%, and in other cases it will be 2%. The limit definitely remains. One bigger other change which has come here is that even if the job worker, the person who is doing the job work, if he purchases the material on his own account, and that material is purchased from the related parties, that is related parties which are specified in section 48(2)(b) of the Income Tax Act, then this material purchased from such associates also will be considered as a material, as a cost and the this work cost, and TDS will be deducted on that amount also. So that also has to be kept in mind. Again, the lower rate of deduction here, 15G and 15H cannot be given. The lower rate certificate can be applied in case of such payment. So basically, this is related to the 194A and 194C payment. Then coming to other payment, that is other 194J provision. 194J provision, there are two amendments which are there. That is in case of the two rates have been specified now. That is 10% and 2%. That is fees from technical services which are there, the TDS will be required to be deducted at the rate of 2%. And in case of there is film distribution units, that is those who are in the media industry, and if they make any payment for the royalty for any films distribution or sale of films, sale or distribution or exhibition of films, then that will be covered at the concessional rate of 2%. And this 25% rate concession is available for this payment also. And there is a very thin line of difference between fees from technical services and fees from professional services. The normal fees from professional services will be chargeable at the rate, TDS will be required to be deducted at the rate of 10% and not at the rate of 2%. Now, what is fees for technical services? Then you have to refer to the definition which has been given in section 9 explanation to this subsection 7 and clause number 1 of this section, wherein the definition of totally what amounts to fees for technical services has been given. So if any of these deductions are being made at the lower end, you have to ensure that that falls, this the nature of payment falls within that definition of the which is given. As a simple category maybe there that definitely as a part of the deductor, it may be falling as a fees for technical services, but when in the eyes of the assessing officer, it may fall as a professional service, not as a fees for technical services. Then it will be this will be a litigative matter, and the demand may be raised in such case. So you have to be very careful, very specific while dealing and specifying this activity. A simple example which may be taken over here is basically in case of a editing studio which is there, a studio which runs editing studio which is running, when they receive some work for editing work, and for that editing work they have to take the services of the professional person, and along with the professional person they have to take the services of technological machines which are in the these things have been defined. So whether such type of activity will be covered as a fees for technical service, definitely yes, because of the explanation that the section 9 says that it is a fees for technical services, wherein if now in case of this mobile companies, they take this satellite service or not. These type of services which are happening, these type of service comes within the category of fees for technical services, where there is a use of machinery or such items. So that should be considered. That should be kept in mind. So any payment which is made in the professional capacity should be TDS should be deducted at the rate of 10% and not at the rate of 2%. That should be kept in mind. And again, that 25% rate concessional rate is available for this year. That is 7.5% will be the rate applicable for from 14th May till 31st March 2021. Then, like dividend which was made taxable in the case of companies on the similar lines, the income there is mutual fund income. That is dividend, the income which is distributed by the mutual fund is also made taxable. So earlier the mutual funds which were defined, the mutual funds definition has been given in section 1023, and those mutual funds who distribute income, that is like dividend given by the company, the TDS will be required to be deducted by them because they were earlier they were entitled to pay the dividend this in distribution tax, and the income was tax free in the hand of the recipient. But that now is withdrawn, and they have to, whenever they pay the dividend, there is income whatever they will be paying it, TDS will be required to be deducted at the rate of the 10% and revised rate that is 7.5%. The basic exemption limit here of 5,000 definitely remains. So if any dividend income in the financial year, if it exceeds 5,000 rupees, then the mutual fund will have to deduct TDS. Again, those who are having income which is below the taxable limit, they can apply for issue form number 15G and 15H to mutual fund. The TDS, once these forms are issued, mutual fund won't deduct the TDS and TDS. And again, lower rate can be applied. So in all these cases, lower rate application and there with the option is available with the SSA. Yes. Then the one new provision which has been enacted in this act, that is 194O, which deals with the transactions which are done by the e-commerce transaction. Basically, it says that 1% or TDS has to be deducted in case of sale of goods or provision of services of an e-commerce participant and on the platform which is given by the e-commerce operator. So here it has two definitions, that is e-commerce operator and e-commerce participant. E-commerce operator is a person basically who has the platform. That is basically the person who has the online platform wherein the person, the participants come. That is those who are the manufacturers or the sellers of the services. They take the services of this e-commerce participant platform, and their services are listed. So anybody who is taking their services from that, the person who has provided the platform, when he makes the payments, here at the time of making the payment, the TDS has to be deducted at the rate of 1%. 1% has to be made. And this concessional rate for this will be 0.75%. Here it says that TDS has to be deducted at the time of making what if the turnover is exceeding this 5 lakhs in case of individual and HUF. The basic exemption of 5 lakhs is being given to the individuals and HUF and not to the other participants. That is, as the e-commerce participants other than individual and HUF, then 5 lakhs limit is not applicable to them. And if any of these transactions, that is basically e-commerce participant, e-commerce operator, it is required to deduct TDS under any other provisions of the Income Tax Act on these transactions, then this from 194O will not be applicable. 194O will not be applicable. So this has to be kept in mind. So here there will be a two-way deduction of TDS. That is when e-commerce operator makes the payment, that is to the e-commerce participant. As e-commerce participant may be a manufacturer, service provider, anything. Like suppose we as a chartered accountant, we have approached the Amazon, that we will be providing that you can file the return through Amazon. So when Amazon will make the payment to us, TDS will be required to be deducted. The TDS will be deducted at that time. And whenever we will be paying certain fees to Amazon for the services, that basically Amazon charges certain percentage of fees for this. And at that time, at the time of making the payment, if we are liable to covered by the tax audit, then we will be required to pay a deducted TDS on the fees which are charged by the Amazon. So this is one basic example which has been given. So it will be a double way TDS. And any advertisement which are posted on the website of the e-commerce participant, etc., these are not covered by this provision because they are already covered by the other provisions of the Income Tax. So there are many issues which are related to 194O, and for that purpose, certain clarifications was issued by a circular. That is, one such clarification was out that whether this, because when the the transactions are done on the stock exchanges, because stock exchange is also a e-commerce operator wherein the brokers are registered and the transactions are being done. So whether that will be covered by this 194 or not, the circular which was issued on 29 September is exempted that if the dealings are being done through recognized stock exchanges or clearing corporations, then even the clearing corporations which are there in the International Financial Service Center, they are also exempted. And so basic here is that if it is done through a recognized stock exchange, then it is exempted. Off-market transactions, it is not exempt. So off-market transactions are covered by other provisions, not by this provision. So then in case of electricity company, now one was that the electricity company, whether the electricity company will be covered by this provision or not, that is they will also provide, they are also providing services online through online. So 194(o) will not be applicable to the electricity, even renewable energy certificates which are dealt online. Any energy saving certificates which are traded to power exchanges, these are also will not be covered by these provisions of 194, provided they are approved by the Central Electricity Regulatory Commission. That is CARC approved certificates are exempted from 194(o). Then payment gateways, like payment gateways are not required to deduct TDS because they deduct TDS. Basically, this TDS is deducted under the other provisions of the Act. 194(o) also will not be applicable in case of transactions of insurance. That is those providing insurance, that is insurance companies. Those are this insurance aggregator and has no involvement in the transaction between the insurance company and the buyer of the insurance policy. So those who are buying insurance online on the insurance policy, because that also is the insurance company is the e-commerce operator, and so in that case also this is exempted, because unless there is the involvement of any insurance agent or the person in it. Then threshold limit of 5 lakhs has to be computed from the 1st April 2020, because what has happened, this provision was made applicable from 1st of April 2021. But due to corona pandemic, the implication was being deferred to 1st of October. So this provision came from 1st of October onwards. So 1st of October, so in case of individual and HUF, the turnover limit, the basic exemption limit which is there, which is 5 lakhs, will be covered from 1st April onwards. So whatever the transactions which are done from 1st April to 30th September will be counted for the purpose of 194(o) deduction. That is, if for simple example, I can give you that as on 30th of September, the total transaction done by the e-commerce operator was 6 lakh rupees. So 6 lakh rupees. So when this provision became effective from 1st of October 2021. So on 1st of October 2020 onward, any transaction which has been done, TDS will be required to be deducted. So basic exemption limit is already exhausted. So in the instant case, if the basic exemption limit was if the turnover from 1st April to 30th September was 2 lakh rupees, but subsidy 2 lakh rupees only, then 3 lakhs limit was remaining. So once that 3 lakh limit gets exhausted after 1st of October, then whatever the extra amount which will be there on that TDS will be required to be deducted by the e-commerce operator. So this is the clarification which are given by this circular. But here the certain technical difficulties are there. Basically, e-commerce operator. What is e-commerce operator? If the definition here it says who owns, operates, and manages the platform that is like Snapdeal, Amazon, then Flipkart, etc. And the stipulation as regard to the responsibility of paying to e-commerce has been done away with. That is, e-commerce participant. Now it says that if the 206AA says that if the PAN number is not provided, then the TDS is required to be deducted at the higher rate. So any e-commerce participant who is there, if it doesn't have the PAN number, then the concession rate of 5% will be applicable. Then if it doesn't have the PAN number or the Aadhaar number which is required to be given, then instead of 20% applicable rate, TDS will be at the rate of 5% in this case. And threshold limit other than individual and HUF is not available. Now, in case of e-commerce when there is a transaction of cash on delivery transactions are there, what happens? The person delivers the goods to the customer, and the person money is collected directly by the e-commerce participant. Then whether the TDS has to be deducted on such amount, definitely yes, because e-commerce operator has to keep the track of all the transactions which are done on its platform. Even if it is a cash on delivery transactions, they will be there required to be and if any goods return subsequently is being done, so that deduction of goods return will not be available in such cases. And even what amounts that TDS has to be deducted on the gross amount, inclusive of GST. That is, deduction of GST is not applicable to this. So that also has to be kept in mind. And any or non that is a foreign e-commerce operator, if they are there and we are doing the business here in India, they will also be required to deduct the TDS. They will have to comply with the Indian provisions of the Income Tax Act. They have to obtain the registration, obtain the TAN number, and deduct the TDS. That deduct the TDS. So these are the practical difficulties, and any e-commerce participant will definitely deduct the TDS applicable for under section 194C, 194J, 194H, etc., etc. at the time of making the payment. Then coming to another provision, that is 194N, this deals with the TDS on cash withdrawals. This was made effective from the changes has come from 1st of July 2020 onwards. The 1st of July 2020 onwards, there are two changes which has been made. That is, bank will be deducting 2% TDS on the cash withdrawals which are exceeding 20 lakhs. So up to 20 lakhs, there will be no deduction of TDS by the bank. So if you withdraw any amount exceeding 20 lakhs rupees, TDS will be deducted at the rate of 2% of the cash withdrawal amount. And if the person is a non-regular return filer, that is, who has not submitted the return in the last 3 assessment year, if they withdraw any amount which is exceeding rupees 1 crore rupees, in that case, TDS will be deducted at the rate of 5%. And for this purpose, whether the person is a regular income tax return filer or not, the Income Tax Department's website has already given a link wherein the bank will be able to verify whether the person is a regular income tax return filer or not. So, and central government has again given the concessions that this 194N provisions will not be applicable in case if the payment is made to the government authorities. If the government authorities may withdraw the cash from the bank or any local authority or any other bank, that is like cooperative bank may be having an account with the nationalized bank. In such a case, a cooperative bank withdraws the cash from the national case of the ATM or ATM operator. There's those who are doing the ATM cash replenishment in the ATM machines. They are also having the bank account and they are also required to withdraw from the bank. In such a case, these entities are also exempted provided they are registered with the RBI, they are authorized by the RBI, and if they are authorized by the RBI, the certificate will be required to be given to the bank that and based on that the TDS will not be deducted. Then again, APMC markets, basically commission agents or the traders which are operating with under the APMC. Because what happens, APMC, what generally they do, they buy the goods from the local farmers. Local farmers may not be having the bank account and they are required to give the cash to the farmers. And for giving the cash to the farmers, they have to withdraw cash from the bank. And so any registered APMCs are there which are registered under any state laws. And then they have to produce the certificate to the bank, and then if they produce the certificate to the bank, 194N will not be applicable. This is specified in section notification number 70. Then authorized dealers, basically those who are dealing in the foreign exchange, they also keep the bank they are also required to withdraw the cash to give the in exchange of foreign currency to the non-resident persons. And even so the persons who have purchased the foreign currency and they come back to India, as per the RBI laws, they are required to submit that currency within the specified time limit under the FEMA Act. So in that case also, these type of authorized dealers which are dealing with the foreign exchanges, they are also exempted from this 194N. So bank will not deduct, bank will not be required to deduct TDS in these 3 cases. There is basically this government companies, banking companies, ATM operators, then commission agents, commission agents or the traders which are registered with the APMC, and the authorized dealers or the franchises who are full-fledged money changing registration under the RBI. So this provision is not applicable. The exemption is given to this type of SSC. Then other sections, there are minor changes in the small sections that is basically which relates to the enhanced this payments which are made to the non-resident individual, non-resident parties. That's 194 LBA, which deals with the income which is distributed by distributed by any company or a business trust. Then the TDS, this rate will be applicable will be is increased to 10% with effect from assessment year 21-22. Then 194 LC, that is concessional rate, which was getting over on 1st of July 2020, has been extended to 1st of July 2023, 23 in respect of any this interest which is paid to non-residents, non-resident, and the TDS rate will be 4% if the interest payment is made against the borrowings through issue of long-term bonds or issued by any regional development bank which are listed on a recognized stock exchange in any international financial service center. So, and the period of this period of concessional rate of 5% is also extended to in respect of payment which is made to FIIs and the qualified financial institutional investor. So that is change has been made. Then section 195, which deals with the payments which are made to the non-residents, wherein now it was stated that the payment which was payment at the time of making the payment TDS was required to be deducted. But this provision has now been amended. It says that the deduction of the this payment, deduction of the TDS will have to be made at the time of credit or payment, whichever is earlier. So that provision that is there with the and dividend which is remitted to the NRIs. TDS is required to be deducted under section 195 because now the dividend distribution tax is removed. So any dividend which is paid to the foreign individuals, foreign non-resident shareholders, then TDS will be required to be deducted. So 194 this provision which was there is supposed to be deleted, and even the payment which are made by the mutual funds, etc., are also covered by this provision. Then 196A, that is again this definition has been amended. That is section 1035 has been modified to is substituted. That is Unit Trust of India has been substituted in the definition. So that is the change which has happened applicable from 1st April 2020 onwards. That is assessment year 21-22. 196C again, that is there's a change in the definition, that is income from foreign currency bonds or shares of an Indian company, and 196D which deals with income of FIIs from securities. The exemption has been amended to remove the exclusion of the dividend because now dividend is become taxable. So that the exemption is now removed. Section 201 basically deals with the late payment of interest of TDS and all. This is the major issue which was happening, wherein the TDS defaults are being increasing. And to plug this loophole which was there, because the time limit which was short within which the government can take the action against the defaulters. So herein the time limit has now been given increased. That is, time limit will be calculated from the date of filing of the correction statement, that is the revised return which we call on the income tax. So the time limit has been increased. The extra time has been given now to the powers of the assessing officer has been increased. Then section 204, which deals with the definition, that is a person who is not resident in India. That is any person who is doing in any non-resident persons who are doing business in India are required to comply with the Indian rules, and for that purpose they are required to appoint some authorized agents, authorized person who can deal with the government or who is authorized to file the statements because and so any defaults which are made by such type of assessors, the action can be taken against such person. So this has been added. This has been added. So that is, any person who is appointed as an agent will be considered as a person who has done the default, and the action can be taken against that person. And one other big thing I will like to point out here is that many chartered accountants and our professional brothers are being appointed as a agent of this. They have given the entire work on a contract basis to the CA firm to deal with filing the returns of TDS, payment of TDS, etc., etc., as a remuneration which has been specified. So in that case, if the person has the authority has been given to such persons, then such chartered accountants also will be held responsible under provisions of the Income Tax Act. So that also has to be kept in mind. Then TDS about this we have already discussed that 194A, 194C, 194H, 194I, 194J. So any individuals or HUF who are having turnover exceeding rupees 1 crore, they will be liable to deduct TDS under these provisions. That is 192, they are already there. Then whether they are covered by TDS, this turnover limit or not, that is not there. They are required to deduct TDS if you are the TDS on the salaries, if the income, this income from salaries is taxable and the tax is payable. 194A, 194C, 194H, I, J, and 206C will be in this provision. It is mandatory. That is, they will be required to deduct TDS under this provisions mandatory. Other sections are being exemptions are being given to this. Then coming to the second part of this, that is about TCS amendments. That is bigger changes which has been made. That is, TCS has been made applicable on the liberalized remittance scheme, basically, and whatever the TCS which is there on overseas remittance, this 206C1G has been added. This provision again was outcome of the Finance Act 2020 onward, 2020, which was effective, was made applicable from 1st of April 2020. But due to Corona pandemic, both this section 206C 1G and 2061H implementation has been deferred, and there is to 1st of October. So from 1st of October 2020 onwards, both these provisions has become applicable. And now what it says that the 2061G deals with the 2061G is basically the authorized dealer. There is an authorized dealer is the person who is remitting the amount. So whenever any person, Indian resident, visits to the authorized dealer for making any remittance, because directly remittance cannot be made, you have to approach to the authorized dealer. Authorized dealer may be a foreign money exchange, this FFMC or a bank or any institution which is authorized by the RBI. Now it says that receiving an amount or an aggregate of amounts of rupees 7 lakhs or more in a financial year. Remittance out of India under the liberalized remittance scheme of the RBI shall be liable to collect TCS if he receives the sum in excess of the said amount from the buyer being a person remitting such amount out of India. So those persons, the authorized dealer, will be recovering TCS from the person who is remitting the money, and they have to deposit. TCS has to be, so any amount which is exceeding rupees 7 lakhs in case of LRS scheme, and TCS to be on the aggregate of the amounts in excess of 7 lakhs rupees remitted by the buyer in the financial year. So this limit will be from the entire financial year. So first, any transaction which is done from 1st of April to 30th September will also be counted. So if that any aggregate of this amount exceeds 7 lakhs, so up to 7 lakhs rupees, the exemption has been given. TCS will be at the rate of 5.5% if the this amount exceeds 7 lakhs if the person is remitting the money for the purpose of education. So in case of education, if the person has borrowed the money from any financial institution and is remitting the money, then TCS would be at the rate of 0.5% and not at the applicable rate. In other cases, it would be 5%. 5%. And if the person does not submit the PAN number or the Aadhaar card number, then the TCS will be at the rate of 10%. 10%. And this 7 lakhs basic exemption limit is not applicable to the tour operator. The tour operator, in case of tour operator program, operator TDS has to be deducted under whatever may be the amount in case of foreign travel, foreign tour packages. So this is the changes which has happened. And one question may come here that basically this is the purpose of introducing this provision is to ensure that the money which has been spent on foreign tour packages, etc., is basically in cash, and the facility is being provided by many tour operators by accepting cash and all. And but now since the tickets, etc., packages are booked, hotels are booked in the name of the traveler, etc., the entire tour program package which is given, which is sold, TDS will be applicable. Even if the tour program is purchased from the non-resident suppliers, then they are also liable. They are also covered by this provision. They will have to deduct this add TCS and pay to the government. And one question may come here that suppose I don't submit the PAN number and all, let them deduct 10% the cost of my, and I can utilize my cash money for foreign traveling and all. So here it has been stated, provision in the Income Tax Act has been amended that wherever the TDS there is collection is at the higher rate, the name, address, and the of the person has to be given, that from whom the higher rate has been collected. So again, there will be a cross check or cross inquiry against such persons who have not submitted the PAN and Aadhaar, because generally when the foreign tours etc. happen, is done by the persons who are financially capable of traveling, and not by the any other person. But here it is given that exemption has been given to certain type of buyers. Basically, the government authorities, central government, state government, embassy, high commission, legation, commission or consulate, trade representation of a foreign state, local authority, wherein the definition has been given. That is, those who are defined in the section 1020 are exempted. And government in future may come up with any such notification in future that these type of persons may not may be exempted from such this levy. So this is basically, and certain questions here come, what is covered by the, what is liberalized remittance scheme? Then liberalized remittance scheme basically is defined under the FEMA Act, that is section 20, there is 2 subsection 5 of the FEMA Act deals with this. This liberalized scheme is basically is applicable to resident individuals. So those remittance which are done by the resident individuals, that remittance are only covered. So any remittance which is done by non-resident individuals, these are not covered by 206 IG 1G. Then FEMA Act, there is a difference of definition, that is basically a person who is residing in India for more than 182 days during the course of preceding financial year, but it will not include a person who has gone out of India or who stays out of India, in either case for taking up the employment outside India, or for carrying on outside India, or any business or vocation outside India, or for any other purpose. In such remittance would indicate its intention to stay out of India for an uncertain period. So here you have to see that resident individual definition, you have to see as per the FEMA Act, not as per the Income Tax Act. And the person who has come to India will also be treated as a resident, provided this for taking up an employment in India, or for carrying out any business in India or any vocation in India, and for any other purpose in such manner as would indicate that he has to stay in India for an uncertain period. So these type of period persons are covered in case of individuals. Then in case of foreign body corporate which are registered or incorporated in India, any foreign company which are having the branches in India, they are also covered. Then office branch agency in India only and controlled by the person resident outside India, and office branch or agency outside India owned and controlled by the person in India. These persons are covered. The section is binding on the authorized dealer for the remittance. Now, suppose if the authorized dealer has not deducted the TDS, this is not collected the TCS, whether the person who is who has done this transaction, whether he will be held responsible? No, he is not held responsible. So this all definition has to be understood by the authorized dealer. And those that is those basically those who professional brothers who are handling the work of these authorized dealers, they have to ensure that the compliance has been done properly. Then what comes under regularized scheme of remittance? This this section 5 of the FEMA Act says that up to 2,50,000 USD per financial year, April to March, is exempt. That is they are covered by any person can freely remit the money up to $2,50,000 without any permission of the RBI. So that is stated by the liberalized account scheme. That is, these type of transactions are covered. Now, current type of transactions which are permitted, there is basically private visits to any country except Nepal and Bhutan, gift or donation, going abroad for employment, emigration, maintenance for any relative of the relative abroad who are staying, one for studies, traveling for business, attending any conference or medical treatments, expenditure in respect of studies, or any other current account transaction which is not covered by the definition of the FEMA. So these type of transactions are covered by section 206 IG. Then these permanent there is opening of foreign currency capital account transaction, like opening of foreign currency bank account, because now anybody can open a bank account in foreign countries is permitted now. Purchase of property abroad, making investment abroad, acquisition of any shares abroad, Then about qualification sales, acquisition of any this sales against the foreign professional services which are rendered, purchase of units of mutual funds, venture capital funds, then setting up of a wholly owned subsidiary or joint ventures outside India, extending loans or including loans to any Indian rupees to non-resident Indians who are the relatives of the who are the non-resident Indians who are the relatives of the Indian resident. These are the type of transactions. All these transactions are covered for deductions of this. So basically, so this any type of these transactions which comes with their TDS TCS will be required to be collected, and the person, the deductive will be entitled to claim that TCS in the return. Basically, the purpose of this bringing this provision here was that to ensure that any remittance which goes out of the country does not go without the payment of tax, which is liable to for the taxation purpose. 15C and 15CD are required to be issued, and this was the one way wherein this type of transactions were being controlled. But to ensure that, because what happened, the 15CA, CB, etc. verification is done after a long period, and the transaction may get complete, the person may go away, a person may not be traceable, etc. So the government has come up with this that 5% is recovered, and so that whenever these transactions are taxable, tax can be adjusted and balance can be refunded to the party, refunded to the SSU. Then coming to the most controversial provision that is about 20631H, which is made applicable from 1st of October. Earlier is the same on the same lines. It was applicable from 1st of April, but the applicability was deferred to 1st of October due to Corona. Then it says the definition, it says the TCS is applicable on the sale of goods. Is every person who is a seller whose total sales, gross receipts or turnover from the business carried on by him exceeds 10 crore during the financial year, immediately preceding the financial year, who receives any amount as a consideration for sale of any goods or aggregate of any of such value of exceeding 50 lakhs in any previous year, then excluding the goods which are exported out of India. So here it requires that two conditions has to be specified. Your total sales, gross receipts or turnover should exceed 10 crore rupees in the previous financial year. That is, if it is now, what is total sales, what is gross receipts, what is turnover? We everybody as a chartered accountant we know, because we are doing the tax audit, and tax audit we are well versed with the definition of all these definitions, because these are borrowed from the section 44 AB of the Income Tax Act. So any turnover which is exceeding 10 crore, these type of persons are covered. And once they are covered, and any this person is there is those SSS whose turnover was exceeding 10 crores last year, they are covered. Now, if they receive any amount in the current financial year, basically here if you say financial year, we are taking one example here. That is financial year, in financial year 1920, the turnover was 10 crores. So this person is now, this SSA is now covered for liable to collect the TCS under section 206 IA. So if this person is receiving rupees more than 50 lakhs rupees in this current financial year, that's financial year 2020-21. So it is received in 2021 rupees 50 lakhs from any person against this total sales or against the sales which has been done. The sales may be related to any period. Sales may be related to any period. So if he has received any amount exceeding rupees 50 lakhs from 1st October onwards, TDS TCS will be required to be collected. And this 50 lakhs limit is computed from 1st April, so 1st April to till 31st of March. So for example, if a person has done the business and if he has already received 60 lakhs rupees prior to 30th of September, and subsequently he received any additional amount, so that limit of this 50 lakhs limit is already crossed on 30th of September 2020. So he will be required to deduct collect TCS on any amount which he is receiving from 1st of October onwards. Whatever the amount which has been received prior to 30th of September, no TCS is required to be collected. Then, at the time of receipt of such amount, so you cannot charge this on the invoice. So whatever the invoices which are being made, the TCS is not required to be charged. Like basically what happens in case of when we purchase a car which is exceeding, when the cost of the car is exceeding 10 lakhs rupees, the car seller charges TCS in the invoice. This is not applicable in case of yours. So here, whenever you receive the payment, you have to raise the SSC will have to raise the debit note, and the TCS amount is at the rate of is equal to 0.1% of the sale consideration exceeding rupees 50 lakhs as the income tax, and 1% in the absence of PAN or other. And this 25% that is the rate has been reduced to 0.075% and 0.75% respectively for this current financial year, that is assessment year 2020 on the 2021. And buyer has been defined here. The definition of the buyer and the seller has been defined. Buyer includes all type of persons, but only central government, state government, high commission, legations, these are excluded. Local authority is excluded. Then person who is importing the goods into India, or any other person as the central government will be specifying, they are excluded in that. And the government is going to introduce, that is, if any practical difficulties are happening, the government will consider this provision and accordingly will modify the provision subsequently, and it will be mandatory on all the SSs who are OSs. If the buyer is liable to deduct TDS under any other provisions of the Act, then this 206C1H won't be applicable. Then TDS is not required to be deducted if the buyer is required to deduct TDS. So basically, this is applicable only on the business entities, not on the service providers. Because in case of service providers, definitely TDS provision is already covered, so it is not applicable for service transaction, and this is applicable only for the business entities, not for the professionals, because professionals don't deal in sale of goods, so it is not applicable. Then every guidelines which will be issued by this the central government will be liable to have to comply with. And if this TCS is required to be deducted in any other provisions of the Act, because we have 206 provisions, other provisions are there. Then basically, in case of sale of liquors, then sale of there is scrap, etc. So if the TCS is already collected under that provision, then TCS on sale of goods is not required to be done. And it is at the time of receipt of sale consideration from the buyer and not at the time of entering the sale transaction. It is also again irrelevant whether the 50 lakhs limit pertains to the sales which is made in 1 year or the number of years. Export and import are definitely out of this. Then scope of TCS is on all the goods, because what happened when the finance bill 2020 was proposed, at that time it was stated that on the specified number of goods it will be deducted. And but now when the Finance Act was enacted and the Finance Act 2020 came, it says that TCS is to be collected on all sale of all type of goods. Now, sale of goods, definitely one thing may come in, and what is sale of goods? The definition of sale of goods is not available in the Income Tax Act. Then again, you have to refer to the other act. What is the sale of goods? The Service Tax, Goods and Service Tax Act says that whatever the service activity doesn't form part of the service will be become the goods. Even the agricultural produces, which they are also coming a part of goods. So they are also liable to collect the TCS. So this is there. So this is a very vast and wide definition. You have to refer to this, the definition which are given, or various judgments which are there given by the court of law. That also has to be kept in mind whether that transaction is a transaction of sale of goods or not. And again, that this clarification, that is circular numbers, this was issued last on 29th of September. It says that TCS has to be on the gross amount. That is, even GST amount is also included. So then this will definitely lead to enormous compliance burden on the part of the SS, because you have to collect the TDS, you have to deposit the TDS, TCS, etc. So just for this example purpose, it is that in financial year, if the sale was 60 lakhs rupees and the total receipt is 25 lakhs rupees, outstanding is 40 lakhs. So if that 40 lakhs is received, whether TCS is required to be collected or not, because section is applicable on 1st of October onwards, and no tax is to be collected in the financial year because that amount has already been received. Then 2021, again, if the sale is 70 lakhs rupees, then outstanding is 40 lakhs, because that 40 lakhs is carried forward. Total receipt comes to 1 crore rupees. Then again, that 2021 assessment year, this is the 2021 is the assessment financial year. So 10 to 30th of September, 45 lakhs is received after this. So 45 lakhs, then TCS will be applicable on the 45 lakhs, not on the 55 lakhs which has been received. This is just for your consideration purpose, which has been given. Similar way, again, 55 lakhs is which is this Sale is 55 lakhs in 2021, 21-22. Then 10 lakhs which was outstanding, again 45 lakhs rupees has been received. Then received, and balance is there because the receipt here doesn't exceed 50 lakhs rupees, so TCS will not be required to be collected. So similar way you have to just compute it. And in suppose in that any previous year, if the 10 crore limit does not process, then again TCS in the subsequent year is not required to be compliant. So this is just in out in out. We have to just keep everything in mind for compliance of this. These are the practical difficulties which are. So again, the clarification was that there's all this there is relating to transactions which are done through recognized stock exchange are not covered. They are exempted. TCS is not applicable. Then electricity or electrical renewable energy certificates which are issued traded to power exchange, then TCS is not applicable. So whatever the provisions which was there in 194O has been covered by here also, they are not applicable. Then in case a receipt of a sale considered from a car dealer of a car would be covered by this provision. That is basically what happens. A car dealer who is there, a car dealer will be purchasing the car from the company. So when the car dealer purchases the car from the company and he makes the payments to the company, at that time the car dealer has to charge TCS to the car company. So the company, because again, and when the car seller sells the car, which is exceeding rupees to 10 lakhs rupees, then at that time they are covered by this provision, covered by the other provision. So here, this is a separate provision that, and the payment, collecting payment from a consumer by a car dealer is a separate transaction, and payment of this by a dealer to a company is a separate transaction. Both are separate transactions. Even if this if the TCS is collected from the car which is sold, which is exceeding 10 lakh rupees, TCS is already recovered. So whether that is covered exempted by this transaction? No, it is not exempted by this transaction. Whenever the payment is made by the car dealer to the company, TCS is required to be collected. Then no adjustment against sales return, discount, nothing has to be. You want indirect taxes, GST, no deductions available. But one is that fuel which is supplied to a non-resident airlines, this provision will not be applied. So non-resident airlines is the fuel, they buy the fuel from Indian company, TCS provisions won't be applicable. So these are excluded from this. Now certain issues may come whether buyer can apply for the lower rate of TDS certificate or not. There is no such clarification which has been given, that is whether the application can be done or not. If a buyer has a multiple units, whether the sales made by the different units needs to be aggregated, definitely has to be all the sales has to be aggregated. So for the limit of 50 lakhs rupees, then another issue is what happens if there is a failure to collect and pay TCS. So the government can, SSC can be considered as a person in default, and to the extent the TCS liability is there if the buyer has not filed the returns and paid the taxes on such transaction. The provision relating to TDS non-compliance will be applicable for TCS also. That also has to be kept in mind. And sellers will be treated as SSC in default. So basically, this is related to the provisions which are there. This is a summary. What is the applicable provision? This is what is the effective date, whether that provision is old provision, scope is expanded. This is just for the reference purpose. It has been given to you. So you can just refer to this. This is a chart what we discussed it. This is related to TCS. Basically, the provision what we discussed. This is the summarized provision, effective date, what is applicable, new provision, scope expanded. Then this is the TCS chart. That is what was the old rate and what is the rate which is applicable from 1st of October, 14th of October 2020 onwards. So that lower rate, this chart, that is the reduction rate, is not applicable in case of PF withdrawal. The concessional rate of 7.5% is not applicable in case of PF withdrawal. 192A is not covered. Even winning from lotteries, that is winning from lotteries, is not covered. So in case if the payment is made for under section 194B for winning of lotteries, TDS has to be at the rate of 30%, not at the concessional rate. Then payment to any non-resident individuals, that is NRI payments, whatever the remittance which are made or payments which are made to the NRIs, they are also not covered by this limit. The limit that is concessional rate is not applicable to them. So this is just the summary which has been circulated to you. What was the concessional rate? If the PAN is not given, then the rate will be 20%, etc. then infra income by this, all basically these changes which are related to the remittance which are made to the foreign NRIs. So in that case, the concessional rate is not applicable. Even 194N, that is cash withdrawals, TDS rate is 2% and 5% concessional rate is not applicable to them, not applicable. No change in that. Income from units, that is for NRIs, any dividend which is paid. Income from foreign currency, is again no changes. Income from FIS from securities, no change. So basically, then certain press release, there was one press release which came on 4th of April, which granted certain concessions. There were 4 concessions which have been granted by this press release. First such concession was that those SSs who have already submitted 15G and 15H to the banks or any financial institution in the financial year 1920, and the income is below taxable limit, and so whatever the forms they have submitted in the last financial year would be valid till 30th of June 2021. So new form has to be given, so given from 1st of July, and 15G and 15H, those who have collected the forms, again there is a return which is required to be filed, that has to be kept in mind. Then lower rate of deduction certificate, that is basically due to corona pandemic, income tax offices etc. were closed. So whatever the lower rate certificate which was issued in the last financial year, the validity was extended to 30th of June, provided you have applied for the lower rate certificate in the current year, and the application was required to be done online. That is, once you have applied this certificate online and you are holding the certificate, your old certificate would be valid till 30th of June 2020. And even in this case, if suppose you have this certificate, if you are holding the certificate and the certificate, while filing the returns, the effect of this certificate has not been given, definitely you can write to the CPC. CPC will give you the rectified order, the demands will be removed from the system. Then any payment which has been made to the non-resident individuals, basically including foreign companies who are having P in India, and they have applied for the lower rate, but they have not got the lower rate certificate. So if they have applied for the lower rate of certificate, then the concessional rate of 10% plus surcharge plus cess will be applicable till 30th of June or disposal of application, whichever is earlier. So if a person who has already applied for the certificate in the earlier cases, basically those who are holding the lower rate certificate last year, but they have applied for the lower rate in the current year, and they have got the certificate prior to 30th of June, then the rate applicable from the date on which the certificate is received till that date, old certificate will be applicable, and from the date of receipt of the certificate, granting of the certificate, new rate will be applicable. So that should be kept in mind. And the instructions were given to the assessing officer that any info that pending application should be disposed of at the earliest, and with following a liberal procedure. And there is an entire scheme which has been given by the TDS department. The circular is the procedure is there. A notification is there by we are on dated 27th of April 2020, and they have to dispose the application. Basically, it says that with the minimum information which are required to issue the certificate, that has to be considered by the assessment officer, and the certificate has to be issued to the SSC. These are basically related to this. Then 4th quarter TDS, the due date was extended to 30. That is interest rate, that is taxes which were payable from 20th March between 20th March 2020 to 30th June. The reduced rate of interest will be applicable. That is, if you have complied within that period. 4th quarter TDS and TCS result will be filed by 30th June, which has been extended. The 31st May was the last date, which has been extended to 30th June and subsequently extended. Then TCS under section 194 IA, that is date has been there. No penalty will be levied if you have complied within the year. And quarterly TDS or TCS certificate will be generated after 15 days of the filing of the returns. This was that. And if you don't comply with the provisions, what are there? That for 16A, if you don't issue, then there is a penalty of ₹100 per day. Then if you are liable to obtain the time and deduct the TDS, and if you're forgotten, if you don't comply with, then there is a penalty of ₹10,000. If you fail to deduct the tax, the amount of the tax can be recovered from the this deductee. The deductee has paid the tax, then the SSC will be treated as the SSA in default, and the interest can be recovered provided the necessary compliance of 26A compliance has been done, and any expenses which are there, expenses which are there under the Income Tax Act, there is a disallowance under Section 40 EIA. Then the nature of defaults which are there, that is Section 40 AIA, 30% expenses can be allowed. Whenever this TDS is deposited and the payment is made, the expenses can be claimed. TDS which you have deducted and they have not deposited, then that amounts to a violation, a bigger violation which continues to be a Section 71H can be levied and prosecution penalties are there. So if you have deducted the TDS and not deducted the TDS and held that money and not deposited, it is a severe offense. But if you have not deducted the TDS and not deposited, you are liable to deduct TDS, but they have not deducted the TDS and not deposited the TDS, then the penalties are minimum. There is to the extent of the extent of the default, penalties can be levied. So 2011A, 2011, 221, etc. will be applicable based on the nature of complete default. We have to penalty will be levied. And the department has come up that any messages or any emails which you receive from any source code or the URL which are there, please don't reply to any mail. And any notices which you receive from the income tax department, either from the TDS department or TDS CTC, this has to have the DIN number. DIN number is mandatory, and this DIN number you can verify it on the income tax portal. You can verify it. So these are the source code or the URL, and just if any link you have received and it asks you to submit any information, please do not submit any of such information. Go to that specified website of the department from where you have got the message or you have got the information. Don't click any link on that and provide the information. And if you have got any such messages or any such emails or any such communications, then you can complain it. The email ID has been given. It is webmanager@incometax.gov.in or incident@cert.in.org.in. You have to just send a mail that we have received this information. You can, so they will verify whether their source is correct or not. So you just do not provide any such information anywhere. So friends, I have tried to cover whatever the things which were possible in the specified time which was there. I think whatever the time is 1 hour 30 minutes what I stated, 1 hour 30 minutes basically is completed, and I have tried to address the things at the best possible manner and cover every provisions of the amendment which has happened in the dealt by the Finance Act 2020. Thank you very much everybody for your patience hearing and all. And now whatever the questions are that we have ample of time, you can take it definitely. Take the question. You can type the questions on the chat box. Chat box, and I can read it out and for the benefit of the other members, and we can discuss the issue if anything. And any queries related to CPC or any related to any TDS related issues, if it is not being resolved, you can forward it to our DirectX committee's email ID, that is dtc@icai.in, wherein we have the regular meetings with the CPC officers and the issues are being taken up and to the we are trying to resolve to the best. Thank you very much.
Thank you so much, Avinash sir. I would request members, those who are having any queries or need any information from Avinash sir, kindly write it in chat box. So we will wait for 2 minutes if anybody is having question and is typing. If anybody is typing, yes sir.
No queries when everybody has understood everything.
Yes sir. Seems no one is having any query. All the details, sir, you have covered up almost. Uh, on behalf of Surat branch of WRC of ICI, sir, I would like to thank you specifically and would request you to come again and enlighten us with your knowledge and our members. Sir, some queries, I think, in the chat box.
194N is applicable from the last, only the amendment which has come is from 1st of July 2020. Once this chart has been given to you, just refer to that chart. It will comply, it will cover your queries.
Yeah, we will share the chart with you.
Yeah, this presentation will be shared and everything has been given in detail in this. You can just refer to that. And there is a change in the provision from 1st of July 2020. Other this provision was already there. Only the changes which has come due to some modifications has been made in this section.
Right, sir. So thank you so much, Avinash, sir, for being with us and sparing your valuable time with us and with our members. On behalf of branch, once again, I thank you and thank you all the members for patience hearing and participating in the seminar. Thank you, Avinash, sir. We'll have you again in Surat branch. Thank you so much.
Thank you very much.
Thank you very much.
Thank you all.